mortgages, how banks steal properties. I'll try and use as a basic example. We have two people trying to buy the same house of, say for example, €100,000. Now the first person has saved all their money, and they have a €100,000 in their pocket to buy the house at 100,000. You have the person who doesn't have €100,000. They maybe have 10,000, maybe have 20,000. So I'll just say that, for example, they have 10,000. Now they go along and the two people bid for the house at 100,000. So it comes back that there's two people bidding. So then automatically, of course, you're expected the house will go up in value, will go up to 105,000. Because of course the seller wants to get the highest price. Now the person that has €100,000 hasn't got the extra 5,000 to go up to 105,000, but the person who has €10,000 goes to the bank, and the bank hasn't got the 100,000 or the 105,000 in principle. The bank perhaps only has 5,000 in principle that it's willing to print the counterfeit money against. And so the bank who does not have the money, the buyer who does not have the money, they print counterfeit money under fractional reserve banking of 105,000. So the person who has got value now can't compete, because this fraudulent system has printed out counterfeit money, and the person who has the loan from the bank goes along, buys the house for €105,000. The housing bubble got to a stage in Ireland where standard practice in most countries is that the loans, the counterfeit loans, fraudulent loans given by banks is 2.5 times the person's income. So you had people in Ireland pre-1997 say earning 40,000 a year will get a loan of €100,000. By 2006, 2007, people were getting probably on average about 6 or 7 times what their income was, and in some cases up to 10, 11, 12 times. So you have people earning €40,000 a year being given these fraudulent loans of €400,000. That's what inflated the housing prices. So this is why houses which cost basically €20,000 to build, when you include labour, the materials and the planning, €20,000 to build a house. These houses are being sold in Ireland for 300,000, 400,000 euros. It's not market values, it's bank values. It was not the dynamics of the market which decided the prices, it's the banks which decide the prices. Once you understand how fractional reserve banking works,